We have the first management on the show joining us now. Senco Gold and Diamonds. The stock has surged 50% in 2024 so far. The company achieved retail sales growth of 11%, same-store sales growth of 4% in Q1 of FY25. To discuss all of this and more, we have Suvankar Sen, the Managing Director and Chief Executive Officer at Senco Gold and Diamonds. Always fun to chat about jewelry, right? Especially for me. But Mr. Sen, good morning and thanks a lot for joining in. I want to start by asking you how demand has been in Q2 so far. There's the wedding season upcoming. There is, of course, lots of traction that we're seeing in the sector itself. But give us some numbers. What kind of growth are you looking at in Q2? And, what is the outlook for FY25?
So if you really look at it, the first half of the year, in this financial year, the number of weddings are much lower compared to what we were seeing in the previous financial year, which is leading to the kind of growth numbers that you have seen in the Q1 with the heat waves and, the elections in place and the lesser number of weddings that were there scheduled for Q1. So the growth has been on the lower side of, say, 9% overall and 11% for retail sales growth. But in terms of the expectations, because we are already seeing that the consumption that is happening at the stores is largely led by the weddings in the second half of the year. So, collections, jewelry, designs for the weddings have already been launched, and people are hoping and expecting that prices of gold might go up further high on this towards the end of the year, so they can start buying now. So with July, there are a few wedding dates, but they are much lower compared to last year. So people are buying, but overall, with the gold prices that have gone up by almost 20% in the last 2-3 months, I think that volumes are taking a hit and consumers are just waiting and watching that how does the price behave. So this is overall what we are seeing at the consumer end.
Okay. What about same-store sales growth? What are you looking at for the full year?
So this year, we've got in Q1 about 4%. If you look at the last financial year, we had the same-store sales growth of above 15%, almost 18-19%. So last year, I think the overall sentiments and the consumption was much higher. This year, Q1 should be just like a blip because with so many things happening, consumers also get a little tired. I guess that with the good monsoons that are in place, it all starts with the agricultural sector picking up. So once that move starts moving, then the money, the liquidity starts flowing. And by the time the festive season comes in October, I think we will be able to see much better numbers. But in terms of same-store sales growth, around a low double digit would be something that is expected. About 10 to 12% is a good number to have for the same-store sales growth.
Got it. All right. Hi, Mr. Sen. Good morning and good to see you. Give us a sense about the studded sales ratio. How much was it as a percentage of your total mix? I think it had moved up to around 11%. And also guide us with regard to your store additions for the year. In the first quarter, I think you've added close to around 6. What's the target for the year?
So the target for the year is about 18 to 20 because there will be 10, 12 company-owned, company-operated stores and about 8 to 10 franchisees. So this is how we are looking at the overall numbers. So we've got 6 added in the first quarter. A few more will get added in the second quarter and then the third quarter. So we should be touching close to 20. And in terms of the studded ratio, it continues to remain the same, about 11 to 11.5%. Q1 overall, with the gold prices also moving up, I think consumers have been a little slow in terms of buying. So if you really look at the diamond sales, it has also been a little, under pressure. The Q1 has not seen so much of a diamond sale. So the growth has been very limited in the first quarter of the financial year.
Mr. Sen, I just want to ask you on that store addition, why was retail higher than wholesale? In spite of opening up, new stores, was there some inventory correction? And are we likely to see that for a little bit longer?
No, it's not like that. See, we have a business of exports as well. So overall, if you see that the retail has been higher, but last year Q1 was a Akshay Tritiya year, and the Eid is also playing an important part in terms of the overall consumption of gold jewelry or diamond jewelry. So that because of the gold price, we have seen a lesser demand worldwide for the jewelry as well. That is the reason retail is looking higher than the overall sales of the business.
Mr. Sen, hi, morning. Prashant here. I'm looking at some sort of estimates for the future. And analysts are modeling in a straight 20% kind of growth for this year. That's revenues, and next year, FY26. So you
Correct.
should, if you go by these estimates, you should be about 7,600 crores by FY26,
Yes.
based on this run rate. So that seems reasonable to you. Also, margins are about 7.5%, more like. That should be broadly where you should be.
Yes, yes. That is how we are looking at the business, that every year. And if you look at the historical past as well, an 18 to 20% growth in terms of top line and also in terms of bottom line, which will take us towards a 7,500 crores to 8,000 crore by the end of FY26. So this will continue to happen. The number of stores will continue to get added. The same store sales growth will be about 10 to 12%. The franchisee business will continue to penetrate into the smaller towns. So we are seeing that, in terms of the interest, the business people, the various traders, potential franchisees in the tier 2, 3, 4 towns are keen to have, being associated with big brands. The aspiration of the consumers at the smaller towns is also growing up. It is only about utilizing the opportunity. So I believe that the kind of estimates that we have put in is very much achievable.
So let's just, playing the devil's advocate, what are the risks, according to you, to this secular kind of growth, right? It's not just you. So if you look at between 2010 and 2020, we didn't have very many winners in this sector from a stock market perspective. But now, there's you and there's a few others. There used to be Titan, and which of course made a lot of money. But now it's broadened out, the sector itself.
Right.
What could be the risks going ahead as you see it? Could it be lab-grown diamonds? Could we reach an inflection point there suddenly, which disrupts a lot of things there? Competition. I was just reading that Bluestone has received another round of funding, taking its valuation to almost $1 billion. And there are so many other newer players in the area, very well funded, which can sustain without sustain losses while they sort of expand. So just wanted your thoughts, sir.
So one major risk for the sector has always been the gold price volatility, which creates certain, quarters or certain years of lower growth compared to other years. So that will remain. If you look at this financial year, you have so many elections coming in. And if you look at the elections that have happened in UK, the kind of results that we have seen in France, it's all very unexpected. It's all very chaotic. Nothing is clear. In the month of November, the US elections will be in place. So there will be unexpected results or any kind of uncertainty that will lead to the volatility in the gold price, leading to consumers getting confused. So that will always remain an external market factor impacting the business. In terms of competition, yes, what we are seeing is that there is a shift happening from the unorganized to organized. So there are these efforts and endeavors by multiple companies to take a bigger chunk of the market share, and leading to higher discounts and a lot of attractive offers, which might have a downward pressure on the margins. But this is, I think, the major two risk. If you look at it really intrinsically, with the expansion of the business happening across the sector, we need to continuously develop, talented pool of team members, new generation people who are capable of handling the customers, the queries, and giving a great service to the customer. So these are more infrastructural back-end improvements that I think the sector overall needs to do. But in terms of the other part of it, the tailwind that we are seeing is that fact that consumers are preferring brands. They are wanting to be associated with organized sector, looking for better experiences, and that is where the kind of players that you're looking at, the names that you have seen, and the market has become much more widened. So that is the benefit that we are getting in terms of the customer outlook and the better experience that they're looking for.
Okay.
Just one point, the organized penetration of the sector would be upwards of 50%, Mr. Sen, right now?
See, as per the CRISIL data that they had, it was around 40 to 50% compared to what it was maybe 5 years back. It was 25 to 30%. So there is a big change and a fast change happening. So that's how we would look at it. Maybe in the coming 2-3 years, as you said, that it will be moving towards 60%.
All right, fair enough. Mr. Sen, thank you very much. Appreciate you joining in and good speaking with you here on CNBC TV 18. Good luck.